Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's video, we're joined by John Belizaire, the CEO of Soluna Holdings. He's joining us to talk about their 2025 growth strategy and outlook, and we couldn't be more excited. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Soluna, how you think they stack up to the other miners, and your outlook for this company in 2025. Now, with that being said, let's get into today's video. Okay, guys, so that's right. Today's interview, we've gone John Belizaire back from Soluna Holdings. There's been a lot of press releases over the last few months, a very busy holiday season for John and the rest of the team. We look forward to walking through the updates in today's presentation. But first and foremost, John, welcome back to the show. Thanks for joining and Happy New Year.
Happy New Year to you guys. It's nice to be back on the show. It's been a while. I feel like it's been a while since we caught up and a lot has happened. So happy to bring you up to speed and look forward to the conversation today.
Yeah, it certainly has. I think it was around the 18th, 19th of November. I was actually looking back before your SF Compute deal. So that'll be interesting. And I am aware I may need to stop the Happy New Year thing soon here as we're getting close to the end of January. But this will be the last one, John. Hey, so speaking of highlights, key milestones, can you give us an update 2024 overall? What were some of the most memorable milestones at Soluna Holdings? And then specifically, as you alluded to, since our last discussion, what's really been going on at the business as well?
Yeah, 2024 was a big year for us. Very busy year, to be honest. I feel like it went by in a flash, mostly because I think the team, we had our heads down just getting a lot done. Touch on a few of the big ones, I'd say, because we got so much done. If you look internally, the things that we plan to do, we hit just about every milestone that we had laid out. We signed the cloud partnership with HPE, which allowed us to get into the sustainable AI enterprise solutions. And we secured AI customers on the platform, starting with SF Compute, and we announced another one just early this year, even though we actually closed it just before the holidays. We brought on financing to bring on the D2 project, or Dorothy 2 project, by Spring Lane Capital. They've been a great partner for us. We celebrated the groundbreaking of Project Dorothy 2, which happened in August. We actually put a great video around it, and that will be live on our website soon. It's already on our YouTube channel. It really takes you through a retelling of our story now with Dorothy 2, and it's really expanding there. The first half of the substation interconnection for Dorothy 2 has been started, and we expect to complete that here shortly. That's a pretty major step, that we're integrating the project now into the substation, which means we're gearing for a energization to happen in the coming months. Project Kadi is also underway. We started doing some initial pre-construction work, integrating civil work in the substation, and we're well into the process of exiting planning, and you'll see some announcements around that soon. As a reminder, it's a 166 megawatt PPA, and we did the first one, civil work, and that project is sort of call it sort of our next big flagship project, where a lot of big catalytic things we're going to be doing as a company will be based out of that one. We announced Project Rosa quietly, I think, but it's a pretty major announcement. It's another 187 megawatts, also with our existing partner, and it is not too far from Dorothy, a bit south of Dorothy, and it's by a huge wind farm, and so it allows us another project to begin building out our business as well. We also did some new podcasting around AI. We've been learning a lot about AI business. We encourage people to go to Clean Integration and listen to that series. EBITDA growth was strong from a operational efficiency and excellence perspective. We really grew that our enterprise and our business over the last year as compared to 2023. Ancillary services, we had announced kicking it off at the end of 23, and we really stood up that business and generated over $2 million from the Dorothy 2 project from ancillary services. We paid off our convertible note, which was successfully converted and paid off. We went from $9 million, give or take, to zero. We closed the Yorkville growth financing of $25 million as well, which will help to drive the balance sheet, allow us to build out growth in our projects, own more of the projects, etc. And we brought on a new CFO. Those are sort of the things that I can think of and remember right now.
Pretty good.
But I bet if I pulled sort of our company summary, I write a memo to the company every year. There's a lot more in there. Just fantastic execution by the team in 2024.
That's phenomenal. Yeah, we can tell, obviously, you've been extremely busy there. Now, we're going to come back to a few of those themes, obviously, throughout the presentation. But, John, we've been working with you now for over a year, and it's just incredible to see the size of these projects continuing to increase. Now you're getting into the 187 megawatt. Truly fascinating how you were able to take this business model and just continue to scale it as we talked about throughout the year. Now, one piece you mentioned there, and it was actually a specific question I had, this partnership with HPE. You said this was really a pivotal portion or component of securing that first AI cloud solution partnership. Can you talk to us about what this relationship with HPE really does for Soluna?
Good question. So we looked at a number of different partners when we thought about getting into AI. This was very new for the business. We didn't have a lot of, for the company, we didn't have a lot of experience doing it. We were limited in terms of our access to capital, much unlike our peers who had lots of access to capital that can deploy capital and just start buying GPUs, much in sort of the traditional crypto mining phase. Let's just start buying some miners, plug them in, and make some money on them. We wanted to take a more thoughtful approach to entering the space, form a partnership with a company that would have deep domain expertise, have the ability to help us on the go-to-market side, have access to real enterprise customers. In my experience, these new transformational technologies, while they start out with startups and ultimately form the foundation for new big tech companies like OpenAI and so forth, ultimately the enterprise is who benefits the most from these new transformational technologies. And I wanted to, in a way, go back to my roots, if you will, and build an enterprise that can go after these traditional businesses that wanted to embrace this technology. So we looked for a partner that had really strong supercomputing scale expertise, access to supply chain that can get us the GPUs and the chips, and would work with us in a collaborative way to structure a deal where we would have a smaller amount of capital come out of our pockets, if you will, and then use that to begin building a business and then grow with them over time. That was the assumptions that we went into the room with, if you will, to collaborate with HPE. And what we came out with was a small cluster of about 512 GPUs, housed, implemented, deployed at a renewable energy powered data center facility, and a whole services team essentially to sort of deliver, manage, and take care of those GPUs. And then our job was to go out and market that, build a brand around that, and begin to offer services and really learn the AI industry without, putting a big slug of capital to work right away. And what we've experienced is, mixed. I would say we've had a slow ramp in the sales process relative to our peers. mostly because we're smaller and don't have like a really big team. And so I'm a salesman, Dip's a salesman, and other members are out there, hunting for opportunities. We've built some broader partnerships that have given us access to more customers indirectly through aggregation platforms and other software platform companies that are looking for GPUs to back, their footprint. And we've begun to win customers now, and we've begun to build pipeline now, and we've begun to establish ourselves as one of the smaller but fast-growing, sustainability-focused neo-clouds in the space. And that all has been made possible by starting with a strong partnership. We've done some great things through the HPE relationship that would have been harder to do on our own. That's the best way to describe the nature of that relationship and why we set it up.
In terms of like one of the key metrics that people look at in this sort of space is probably like uptime, utilization. Are you able to sort of share how that's grown since you started the service? And what do you see as a target? I speak to companies in the UK, and they're saying on average, we're hoping to get above the 80%, which is generally achievable. It's difficult to get 100% unless you've got one big client.
Right.
But if you're having lots and lots of clients, then it's all about uptime. Where are you from when you started? Bear in mind this is new for you guys, so it's a learning experience. But are you able to share any data on that?
Yeah, so we started out at zero, obviously, when we started the environment. We're up to 20%, and we're growing sort of, our goal is to sort of double every month.
Yeah.
And we have a mix on our platform of on demand. So that's where you get sort of a fluctuation of uptime up and down. Sometimes we're really, really high. Sometimes it's really, really lower. So on average is sort of 20-30%. And then the rest is we're trying to do reserved deals. And there you sign a long-term contract for a year. We're seeing sort of 6 months to a year these days. And depending on the subcluster size, we see anything from 4 nodes. So that's 4 times 8, 32 GPUs to 64 nodes, 512. And some customers are coming in and saying, I need more than 512, for a year and etc. The nice thing about the HPE relationship is we can grow fairly easily into those larger reserve clusters to get the footprint sort of growing over time. And that's what we're starting to see, where the pipe is actually bigger than the initial cluster we've signed with them. And we stay very close. We review pipe with them on a continuous basis. We look at customer needs. Sometimes customers need extra storage, and they help us to design that. And then we send these proposals out, and we've been sending a number recently. There seems to be a pretty significant pickup since the holidays. Folks are really sort of coming back with a vengeance, if you will. I guess everybody's back to work, or but there've been some new financings, and folks are looking for H100s, H200s. We have folks coming in from Asia, the US, Canada, and the UK in terms of different markets. And so a lot of our focus is to oversell the cluster. So our goal is to get, over 80%, and then ultimately sell beyond the cluster and double down on an expansion of our relationship with HPE, if not expand further into other chips as customers show demand for that. What we expected to see was, hey, we don't want to see H100s anymore. We want to see H200s. In fact, we're seeing still a large amount of demand for H100s. I think part of that is there's been sort of an over expansion of H100s in the market. So for a time, there was more H100s than demand could reach. There was a compression in the price, which probably the entire industry is experiencing right now because of that over saturation. And that has increased demand. So the result is you now have more demand, and then you're back to sort of where you're outstripping that capacity, and so folks are coming in with much bigger orders and interest in expanding. We're also seeing the timeline. So people used to do reserve for multiple years, 2 years, 3 years. We're seeing that come in to 3, 6, and 12. And we think a lot of that has to do with just the change of the dynamics with capital. Folks are perhaps raising less money, or a lot of these companies are pre-revenue companies, and so they need to stretch that capital as much as possible. And so by doing shorter term, larger footprints, they can expand and do some of this training on a really big burst and see if they can get some wins, get some product market fit, and then shift to a revenue focus. That's why we did the Ginger deal. If you want to talk about that here, but that basically gives us the ability to help some of these younger companies stretch their capital, and helps us to get more capital up front, if you will, capital intensive business that we are, so that we can deliver a great service for them.
That's great. I'll let Anthony jump in with the next topic here. I just had one quick follow-up. You mentioned you've been doing some AI interviews. I saw you also did a recent AMA. So I went through some of the questions there, John. They had asked about H200s as well, and you guys said you will upgrade in time. I'm just curious, is that based more on the demand for H100s now? You just don't need it yet? Or is this dictated by the HPE relationship? Or when may we start to see that next generation GPU?
It's both. H100 demand still is pretty robust, as I said, or it's sort of resurge, if you will. And then H200, the supply chain is sort of slowly picking up. I guess NVIDIA has had some delivery issues and so forth, and it's available, but you kind of have to wait a little bit for the sizes that some people are starting to ask for. And so that's probably why you're seeing a resurgence of H100s, at least in our pipeline. But we're starting to see H200 demand also peak up. Typically we're seeing 64 to 128 node orders for H100s, H200s rather. And for H100s, we're seeing 64 nodes, and then sort of the smaller clusters as well.
In terms of this model that you're using at the moment, I mean, it is, albeit small, and it gives you the ability to learn lessons going through. It is capital intensive. Also, there's a lot of additional costs which you've already highlighted: sales teams, marketing, etc. Is this a sort of, can you see now already that this is a model that's got potential to grow and will provide the company, the project, with good returns going forward? Or do you think some of the other types of strategies, some of the other miners are moving into? Obviously, they're on a bigger scale, but you have access to pipeline of power. Could you see yourself moving into that sort of direction if the opportunity arose?
Yeah, the strategy on our AI business is twofold. One is to use the cloud business to really understand everything about the hardware, design, cooling, sort of architectural elements of AI, but also where the demand is going to be coming from. If you look at cloud right now, the cloud stack, basically what you have is, NVIDIA at the bottom providing chips. It flows up to the big OEM providers, which flows up to the big neo clouds, which now include a number of miners like us, and then that flows up into data center providers, right? That sort of need to house those GPUs, which then flow up to your customers. And today, at the very top of that chain, it's a mix of your very large AI projects and hyperscalers. And you're starting to see a little bit of enterprise enter into that. And what that stack's biggest challenge is at the very, bottom, or rather between the data center and the customer, or between the neo cloud and the data center, is energy. And that's where we feel we can fit in the most. We are now shifting a number of our projects to not just developing them as BTC projects, but also developing them as AI projects. And we're starting capital formation activities to look for joint venture partners and financing partners to help us to develop those projects into AI data center projects and ultimately get leases on those data centers once they get built out and constructed. And so we think that's the real potential for the company. AI cloud and AI hosting, if you will, is sort of like the precursor to that, allows us to get some revenue, while these longer running projects that can take anywhere from 18 to 24 months to get to revenue. But once that revenue hits, it's a pretty significant amount of revenue for 10, 15, 20 years, right? And so we're doing both of those within the cloud business today. You're not hearing about the data center side yet, but you should stay tuned.
Watch
2025 will be a big focus for us there.
Thanks, John.
That's phenomenal. Now, I also wanted to talk about, you mentioned the completion of your convertible notes and the payoff helping the balance sheet there, John. So I wanted to talk about that a little bit, financing options. Soluna uses a very unique partner financing model, and that's really enabled you guys to repeat that cookie cutter model and continue to scale. Will we continue to see that type of financing going forward or funding for the HPC AI?
Yeah, we're gonna use the same blueprint model. HPC AI is a very similar approach in general. So if you look at the data center space, it's a project finance structure rather, and it is similar to real estate, where you have a development site and then you have JV partners that help you to develop a particular project. Once it reaches sort of shovel readiness, then you do capital formation at that project itself. So you bring in, construction capital, debt, equity, that sort of thing. And you create a whole stack. So the nice thing about that is we already know how to do that, right? Our whole DNA and approach to building projects is around that. And the way you make money is you're the developer. The developer makes most of the money because we take most of the risk. And B, you structure those JVs such that you have the opportunity to put equity capital side by side with that equity that comes in or that debt that comes in. And that's where paying off the convertible notes really opens up the opportunity for us to use our public company platform, to raise capital, to inject money into these projects, both on the BTC side and the AI side. So a lot of the formation activities that we are doing is focused on converting those power projects into AI projects and getting some real partners to step in with us, just like we did with the Spring Lane Capital folks. We're going to be looking for the equivalent of those folks on the AI data center side. There was a big announcement, if you saw last week, I'm losing track of time, I think it was last week, Macquarie Capital Asset Management, so MAM, invested upwards of $4.1 billion as a capital pool to support the development of data centers, with one of our peers in the industry. The beauty of that press release for me was twofold. A is that's a perfect blueprint for what we have been doing with Spring Lane. We're going to do the same type of thing for AI here. And the second is the bank that did that deal is also our bank. So we hired, one of the best in the industry. They've raised billions of dollars for this sort of thing, and they're teaching us a lot about this and helping us to put in all of the pieces. The structuring and, paying off the convertible notes was a key piece to that, right? The types of partners that are going to be coming into the company at the project level, they don't want to see, this particular type of structure that constrains the company. We have to go through all these gates with the convertible note holders to do deals. It has really slowed the company down. By doing that final payoff in December, we now sort of open up the door to a much more flexible capital structure, more simplified, which was one of the promises I've been making now for about 24 months to simplify our capitalization. That was the first major step to that. And now we can begin to really invest capital for scaling the business. What's exciting for me is when I sit with some of these potential capital providers, there's always one question they always ask. They like our model, they understand the renewable energy side, they ask all of those questions. The one question they ask is, what's the biggest barrier to your growth right now? And I can comfortably say it's just capital at this point, right? And that's what they want to hear. They want to hear that, capital is the primary constraint. It gives them a role to play. And they're also going to bring lots more than that. We're focusing on the ones who can bring not just capital, but expertise around, building tier 3 data centers, doing the development work that goes with it. So we're pretty excited about that. So we're basically creating another spring lane. The goal is to get another spring lane, but on the AI side of the business.
You mentioned obviously finance there, and do you see a difference in attitude towards raising finance for HPC type projects versus say Bitcoin mining, the self-mining or the hosting projects that you're doing? Talk a bit about them sort of conversations that you're having at the moment with potential banks.
Yeah. So with Bitcoin, to be honest with you, it's been a challenging process for raising capital. And the reason is most capital providers, their capital comes from very large pension funds and sovereign funds. And those enterprises have, call it, blockers on any type of crypto related investment. Their capital doesn't want exposure to that risk because these are very large check writers or allocators, if you will. And their mandate to these funds is to invest in, stable, almost coupon cutting type of projects that allow them to, get returns over long periods of time. What's amazing about these newer conversations when it relates to AI is you're effectively saying, I want to build a tier 3 data center that will then have a primary lease with a large enterprise or hyperscaler, and I need capital to build that. And inside the building will those companies will be doing AI, and all you get is nodding. They're not saying what is Bitcoin and what's hash rate. They're saying, oh, I understand what you're doing. And tell me about your power structure. How do you do development? Where's your development team? And we're saying, we have these development partners. And that's the other thing we've done, by the way. We found some of the best data center development companies out there, and we're beginning to form relationships with them. They've been doing a lot of the development work on some of our projects. You'll see some announcements this year around that. And so when we go to these capital providers, we tell them we now have the power. We have 2.6 gigawatts. We've proven that we can make a behind the meter structure work for a data center project. We now want to prove that we can do it for tier 3. And tier 3 needs 99.99% power availability and uptime, and we have a power design that supports that to a point where 70% of our power comes from the power plant, the rest from the grid, and there's probably like a 2% where we can put in sustainability solutions or resiliency solutions rather back there using gas, and we can find gas or other types of forms of energy back there to get you to your level. We have a development partnership with folks who know how to do HPC and DC development for tier 3. All we need is capital, and we have a recipe for a winning business. And those conversations have been very positive thus far. What capital providers see is different from us is because we have this pipeline that really leverages power plants that already exist, and we're going after stranded energy in a very unique way. It allows you to then go to some of these customers and say, we can get you a data center in 25, we can get you a data center in 26, 27, without having to wait for these long interconnection queues, because we've got this company, Soluna, that has a unique way to connect to power that is already ready to go and get access to a substation that's already ready to go. So it's been very gratifying for me, because I can see that what we've built here has a tremendous amount of value, and all we have to do is prove that we can establish the capital basis to, pull that energy and future potential out of the ground, if you will.
That's great. Now, speaking of financing and your differentiated business model at Soluna, you made reference to your Ginger partnership or deal earlier in the discussion as well. My understanding here is this is flexible financing options for the
Right.
end users of these facilities. Obviously, very capital intensive, a lot of upfront costs. You said a lot of these companies are pre-revenue. So, John, can you talk to us about what this Ginger deal does to differentiate your product offering?
Yeah, so it makes the yes easier for startups that are looking to use our platform. Startups, because they're big, they're focusing on a industry that is very capital intensive, right? Before, you would just sort of sling some code together, you got an application, and you're raring to go. Now you're talking about using very powerful compute to train models, and that model training activity is pre-revenue. So a lot of these startups can be in a real cash crunch as a result. And so most AI projects or companies are pre-revenue. And so, they're focusing on building a model that may have commercial applications. And if so, if they can prove that that's true, then they can raise, gobs of money and build go-to-market strategies and applications for their end user customers that leverage this model. And so their initial cash raise is really about proving the thesis, right? So many of these startups are sort of moving away from long-term contracts, because the capital industry is saying, "Hey, I'm going to give you enough capital to, to prove that this model works, but it better work." Then you can unlock the next tranche. And so what startups are basically moving away from super long contracts for AI, because they don't have to drop large amounts of cash for down payments and commitments, but they do need time to do some of this training. So what our partnership with Ginger does is it allows us to provide a solution to this cash dilemma, if you will. So Ginger helps the startup stretch their cash. So they take a potential cost and they can stretch it out over a period of time. Let's say, they sign up for a certain period of time for us, they can stretch that cash payment over time. And then they give us the cash up front. And so for us, we're a very capital intensive business, high cost of capital. We need that cash up front to, make our payment obligations, cover our investments that we're making, and protect our relationship with HPE and make those payments. So it's a perfect solution for both sides, right? It solves a real problem for us and our customers, and therefore makes it easy for them to say yes to our platform.
Switching over to your current construction projects, obviously you've got the Dorothy 1, 1A, 1B, and Dorothy 2 going at the moment. And as you approach the substation interconnection, can you give us an update on that? And also tie into that, maybe your sort of like review of the comments that were made yesterday on the inauguration by the president with regards to his drill baby drill comment, and his views on wind farms in general. Do you see that having any downside on what you're doing at the moment, or is that just sort of rhetoric we're hearing? And actually, the US requires as much power as it can get its hands on from all sources, not just natural gas.
Well, as usual, it's always hard to comment on statements made by our new president. Congratulations, President Trump. So he wants to drill. He wants to get more oil out of the ground, and that's an energy strategy for sure. But at the same time, the world does need a energy sustainability solution. Oil is not sustainable as much as people feel that it is, and it's such an integral part of our economies. It does have challenges. The oil industry probably has about another 30 years. That's probably why Saudi Arabia and some of these other countries are moving their economies to tourism, because even they're smart enough to see that, the party's not going to last forever. And so, despite the comments by the president, renewable energy has a future. It is going to be, one of the important superpowers, because if you look at it another way, it's technology to generate power that is repeatable and sustainable over time. And there's lots of it already built. And those projects have lots of challenges getting their energy to the grid. And there's lots of this stranded power out there. And so our business has plenty of room to grow by going after those projects in the US and beyond that have this challenge. And we can use that to monetize that energy, A, and B, solve the same problems the president is looking to solve for, and that is to supply energy to shape the future of AI and allow us to not only lead the industry, but lead it in a sustainable way and become a beacon or an example to the rest of the world that you can do this in a scalable fashion, but also do it without destroying the planet. Now, bringing us back to Dorothy, there's exciting things underway at Project Dorothy. In D1A, we shifted some of our customers, and we're making some model shifts to the business. We are upgrading our infrastructure to provide more robustness in the site. And we're attracting some of the largest and most successful miners as customers at those projects. And at Dorothy 2, we call it finally D2, is coming out of the ground really well right now. We are on track to complete the substation upgrade this month, as I mentioned earlier. And we're on track for energizing phase 1, which is the first third of the 48 megawatts we're adding, so about 16 megawatts in the early Q2 timeframe. And we're doing a lot of things better in Dorothy 2 this time. All the learnings from Dorothy 1 are being incorporated into the project. We're doing things to mitigate dust, improve temperature control, look at the efficiency of flow throughout the site. The layout has been expanded. Buildings are being built with different materials to improve the thermodynamics of the facility. And we're improving the way we approach the electrical infrastructure to increase its robustness and maintainability, and just a lot. We're changing the way we lay, even down to the way we lay cable in the ground versus above ground to increase the speed with which we can deploy each of the phases. And we did something really well. We pre-ordered a lot of the infrastructure we needed for the site, and that has allowed us to move at a really healthy pace to deploy Dorothy 2 here in 2025. So a lot of great things happening there. If you fly over the site, you see a lot more than you would expect to see right now in terms of build out and infrastructure and buildings. I've been slowly dropping photos on social. We'll get some more out there, and you can see how that's coming together.
That's great. Hey, I know we're almost at the hour here, John. It's gone by so quick. We did want to touch on the Bitcoin mining side of the house. We've talked a lot about HPC AI expansion, obviously the Ginger partnership, HPE. In terms of the hardcore Bitcoin mining investors and fans watching here, what do we have for them this year?
Hash rate is going to go up, obviously, as we launch Dorothy 2. So stay tuned for that. We are considering shifting the D1B, so the pure hosting facility, the pure self-mining side of the business at Dorothy 1 to hosting, but we've made no decisions yet. Stay tuned for that. Customers are bringing new fleets of miners, so you're going to see newer more advanced machines landing at our sites. And if you look at our customer pipeline, some of the largest miners are now calling us to host their fleets with us. So it's pretty exciting. It's the culmination, I'd say, of a very intentional program that we started working on last year to court some of those miners and provide them with white glove service, and it's really paying off. So Dorothy 2's pipeline for contracting is coming in very healthily, and so we're quite excited about the logos, if you will, that will be customers at that facility.
Phenomenal. Well, if 2025 is anywhere close to the laundry list of things you did in 2024, I think Soluna's off to a pretty good start. So, John, I know we've covered a ton today. I wanted to give you a couple minutes just to close out here, but we greatly appreciate the time and congratulations on all the recent success.
Thanks, guys. I really appreciate your support as well over last year, helping to tell our story and get our message out there. I always enjoy being here with you guys. The questions are always very thoughtful and help to get our investors a better understanding of our business. In 2025, we're shaping up to post some very big catalytic things on the board. We are going to continue to grow our BTC hosting business, and that is growing quite robustly. That's one arm, if you will, of monetizing our power. And we're now expanding our AI business with not just cloud, but we're looking to monetize our pipeline for AI by building data center projects. So catalysts for 2025 will be Dorothy 2, as I've mentioned, Kati, really basically reaching shovel readiness, Rosa beginning to mature, and more projects to be announced from our pipeline. Remember, we have 2.6 gigawatts and counting, and more of those are reaching the term sheet and PPA phases. So we'll begin to announce those. We believe the pipeline, by the way, is probably the most valuable part of our business. I know on this show we've talked a lot about that pipeline, and it's been challenging to sort of crystallize how valuable that is when we're speaking from a platform of limited capital access with the convertible notes and a complicated capital structure. That's all beginning to show up in our rearview mirror now, right? Where we're beginning to focus on leveraging the value of a simplified cap table, leveraging our equity. And as we drive to monetize that pipe beyond Bitcoin, it's going to become clear what that value is. But to give you a rule of thumb, and I'll leave you guys with this. So today, if you look at the multiples, the valuation multiples for companies in the BTC space, you guys probably know this better than me, but it's probably like 5x EBITDA or something like that. But if you look at data center companies, data center REITs, for example, most large-scale DC companies are essentially real estate trusts. They build out infrastructure, capital comes in, they get the leases, and then they clip coupons, like I said. Those trade at 20 times, 20x. So if we demonstrate a data center, even one, call it 100 megawatts, let's say, suddenly the multiple expansion for this company would be transformative. I'll leave you with that, and now you know what we're focusing on. We're just going to keep pushing, and we believe we'll get to the goal that we've set for ourselves.
I had a chance to speak with a number of the Wall Street guys back in November, and they said exactly the same thing regarding the difference way the market looks towards HPC in terms of price earning multiples as it is to Bitcoin mining. And you're spot on with the multiples there. They said even if you went really prudent on HPC, you'd use 15, but really 20 is probably where you need to be. But Bitcoin mining at the moment, because of probably the uncertainty and lack of predictability in revenues. I mean, we can't into what the price is going to be in an hour's time, never mind what it's going to be next week or next month. We all here to make sure the price goes up. But with HPC, you've got a predictable model there where you know the revenues, you know the cost, you know the margins. And that's why financing is extremely more acceptable towards them types of business models than they are to at the moment, the mine. We are seeing the volatility, in terms of, reducing on Bitcoin. I mean, it was the Wild West in 2022 and the end of 2021, but we're sort of seeing, a lot more stabilize. Even though it's still volatile, it's getting more stable as more adoption occurs, and obviously it will change. But at the moment, HPC it seems to be the leading light in terms of everything that supports it financial wise and revenues coming out, and hence why the vast majority of miners are moving into that space as we speak.
That's exactly what we're going to be focusing on. And, we've had a lot of cleanup work to do in 24 and some launching and some, big swings for the wall, if you will. And now we're going to be hunkering down and getting the next phase of our strategy executed upon. And we think that the market will reward us for that.
Right on. Well, there you go, guys. A power hour with Soluna and John Belizaire. Very exciting time. We will keep our ears and eyes open, ready for the updates. John, you know where to find us. Thanks again for the time today. You guys, let us know in the comment section. Are you holding Soluna? Do you like the business model compared to the peers in the group? And what is your projection for 2025 for this company? Thanks so much. We'll see you back here tomorrow.